So I thank you all for taking time out of your busy days to attend and listen to me talk about Payday Super for a little bit. I've got this planned for about an hour. Hopefully I'll talk for about 45 minutes, leaving 15 minutes for questions. So we'll see how we go with that. So just a little bit of an intro. For those that don't know me, my name's Adam Sellers. I've got about 20 years of experience with small business tax issues, including payroll. Also got a couple of our client managers here, Anne Stiles and Brajesh Chowdhury. They're in the background, so they'll be helping answer questions, keeping an eye on the Q&A. So you should all have access to a Q&A button on your screen somewhere. So jump in there. If you've got any questions along the way, throw it in there. Anne and Bridge will be working in the background to answer those as they pop up if they can, or otherwise we'll go through them at the end of the session and answer as many questions as we can get through. The recording will be sent to all attendees that registered. So even if you don't get to make as many notes as you want or you miss something, you'll be able to go back and review it. It's also going to get uploaded to YouTube on our YouTube channel. So just when you're posting questions or putting anything in there, just no personal information, or else that'll be available to the World Wide Web. And just one important note, today's an overview of the rules. It's not designed to go through every possible scenario. The rules are fairly complicated, as with any law, any tax law in particular. There's loopholes, there's all sorts of things. Today is just a general overview of the important parts. So we've got our agenda there. They're the things we're going to go through. I won't read through those because we're going to see them in a sec. But first of all is just simply why today's important. Payday Super is misunderstood. It's quite a big change. As much as on face value, it's simply making payment of super more regular. There's a lot of other changes in the back end that makes this a bit more complicated, which we'll go through today. But unfortunately, the government has made very little effort, in my opinion, to educate people on what all these changes are, what it means, what the implications are, which is why we're running the webinar, because we keep getting questions and there's no answers out there. So we've done a bit of work to try and answer as many of these as we can. Unpaid super is a huge problem. The government wants to solve it. Compliance is therefore pretty important, because anytime the government wants to enforce some rules, it implies and imposes penalties against that. So we want to keep our businesses and our clients away from ATO penalties and away from ATO audits. So getting in front of it's pretty important. From the government's point of view and from employees' point of view, more frequent payments is a better outcome for employees. A couple of reasons for that. More frequent payments is more touch points for the ATO and the government to review to make sure payments are actually being made, so employees don't miss out. And the government's view, and it will work for some people, is that it's much easier to find smaller amounts weekly than it is to find a large amount every quarter. True in some cases, not true in others. It comes down to individual circumstances of the business, but that's something the ATO and the government have been relying on when justifying this change. So what is Payday Super? So number one for me is that it is increased standards around how data is shared. It's not just changing the frequency of payments. There is a huge change in the amount of data being shared with superannuation payments. I've got in my notes here, they're upgrading the SuperStream infrastructure to version 3. For anyone that isn't aware of what SuperStream is, it's basically all the data standards around how details of super payments are shared historically between super funds, not necessarily between employers and super funds, but it is being expanded so that when you lodge a pay run through your payroll software, that data is being shared using that SuperStream standard to the super funds. Now, the standards say that every single super payment must be accompanied with some sort of data packet that details enough information for the super fund to allocate the payment against the right member. Has to be sent in the approved format, that the format's approved and detailed by the SuperStream standards, and the data must be sent at the same time as the payment. The data also contains a payment reference number that must be included with the payment. So there's a lot of things there that effectively you can't just make a payment to the super fund anymore and expect that the super fund is going to allocate it to your balance properly. Super funds are instructed actually to just reject super payments that don't have the data packet shared with it. Payday Super is, of course, increased standards around how that payment is made, and the stricter timing on the payment being 7 days instead of quarterly. Just a little bit around the payment side of that. What the government has been doing in the back end is, not sure if everyone's aware of the term NPP or OSCO or Pay2, which are all modern payment methods. Banks, I'm going to say 5 years ago, I'm not entirely sure exactly when, but things like immediate payments have become more standard, more so than payments that go overnight or in some cases 3 or 4 days. Those modern banking standards have been implemented alongside and in with these changes to increase the speed that super payments are actually made. So the government's goal here is that when you push the button to pay superannuation, it gets to the super funds within 1 or 2 days and not 7 to 14 like it currently does. Now that 7-day period is pretty important. That's the one that everyone's going to focus on, and rightfully so. Pretty important to note, it is 7 business days, not 7 calendar days. However, I do have a note there that while that's effectively 9 days, I wouldn't be relying on those extra 2 days when deciding when to push the go button on your super. I personally wouldn't even be leaving it 1 week. My view is that Payday Super is you pay super on the day you do your payroll. No ifs, no buts. You don't leave it to chance. You do it before you forget about it. Ultimately, it's up to each business to decide what they do, but please don't see 7 business days and go, well, I've got 9 days before I have to push the go button. You don't. You've got to allow time for payment to get through, payment to be processed and things like that. So do it as soon as you can. Now the payment date, so the payment date of your wages is the trigger for when that 7-day period starts. Does not matter when you process your payroll, does not matter when your pay week ends or your pay fortnight ends or pay month end. It is the payment date that is the only date that matters. Example I've got here in my notes, if you process your pay for the week ending on a Tuesday, but your standard procedure is to then pay the wages on the Thursday. Thursday is day 0 and you've got 7 business days from the Thursday. We've probably got clients on here that are on a monthly cycle for some of their wages. Often that's the calendar month with payment being on the 1st of July. So 1st of July is the trigger date. There are some concessions to that 7-day rule. New employees, you have 20 business days to pay their first superannuation payment. That's because often you don't get superannuation details straight away. We've all had issues onboarding employees and super details are either empty, they're wrong, things like that. So, you're allowed an extra week or 2 to allow those to get processed. You've also got 20 business days when an employee changes their superannuation fund. Now, I'm actually not sure, because quite often you might see super funds merge and then effectively a new fund is created. I actually don't know for sure whether you get 20 days to process that merger. I believe you do. Probably something I'll check and get some info out to everyone on that. But in general, if your employee changes super funds, you've got 20 days to process that change and get that next payment to them. Again, it's not difficult to change super details in your payroll software, so I'd be looking to do that and stick to your 7 days. But there is a little bit of a buffer there for you. The other main concession is what they call out-of-cycle payments, which are things like bonuses that are paid differently to your normal pay week, pay fortnight, pay month. Those out-of-cycle payments, the trigger date is the next normal payday. So if let's say we're on a monthly pay week, a monthly pay run, but in the middle of the month, you pay a bonus out to your employees. You don't have to pay super on that bonus until 7 days from the end of the month when you pay that monthly wage. So in some cases, that can be a significant concession as to how long you've got to pay that. Nothing stopping you paying it when you pay the bonus. You can pay it early, but you don't have to. Now I've got a slide here about how you make super payments, because there are some changes there. Key point to make is the data packet has to accompany the payment, which isn't a requirement at the moment. We got clients who will just do a bank transfer across to the super fund when they want to do a super payment, particularly for themselves. Like we're talking owners paying themselves. That just doesn't fly now. For whatever reason, the ATO government just don't want that to happen. So it needs to be processed properly through the payroll with the data packet going at the same time as payment. There are certain software out there. There's one called Single Touch Plus that I've come across, where they will essentially create the data packet and let you make a bank transfer across to the super fund. You just need to make sure you process that data packet through their software and send it off to the super fund at the same time you make payment. It's an option if you don't have something else, but it's not the greatest option. It's not my preference. I would be just doing your payroll software and doing it all through there. But if for some reason that is the best thing for you, then there is a way of making that work. There's also what I would call non-payroll integrated clearinghouses. For anyone who's not familiar with the term clearinghouse, normally when you pay super, you are paying all your employees super into one place. That place is the clearinghouse, and then the clearinghouse will split that money up, send it off to each super fund, along with the data packet that needs to be sent to each super fund. So that's the clearinghouse's job. Now, a non-payroll integrated clearinghouse, the best example I've got is the ATO Small Business Clearinghouse. That's not integrated with any payroll. You log into it, you type in your employees' details, you pay the ATO the amount of all employees, and then the ATO splits it up. If anyone here, and I do cover this a little bit later, but if anyone here is not aware, the ATO Small Business Clearinghouse shuts down on 30 June. Shuts down means full shutdown. It doesn't mean you can still access it for 3 years. It means on 1 July, you won't be able to log in at all. Standalone clearinghouses work. In my opinion, they're not ideal. I like things automated. I like things to be integrated. So any system where you're doing payroll in one place and then having to log out of your payroll, log into something else, manually enter details into this other place, it's not an ideal scenario for me. Clearinghouses integrated with payroll are what we're currently using. If you're using Xero, Reckon, QuickBooks, MYOB, any of those, your clearinghouse that you use is probably integrated with payroll. You're paying your quarterly super that way at the moment. Not a lot of change for you. It's great because your payroll and super is done in one process. What I've found, and I've got some more details on the next slide, the process of paying superannuation requires a second authorisation. Normally that's a 2-factor authentication code on your phone or something like that. We just need to be mindful of what delay that puts in the process when you're processing your payroll and processing your super. Now, we're finding that these existing clearinghouses aren't optimised for failure messages. So if you go to pay super and maybe that data packet didn't go through properly, maybe the payment doesn't match the data packet because the amounts have to match up. Let's say the member number that you've got in your system is the last digit's wrong or something, so it fails. The super funds have 3 days to send you a failure report. The new clearinghouses have the ability to receive that failure report and pop that up on your dashboard. They'll probably email it to you as well. Old and existing clearinghouses don't at the moment. So that's something to be mindful of. If you're using Xero or something, you need to be mindful that you may not see those failure messages, and you do only have a couple of days to act on those failure messages. So you need to try and work out how you're going to deal with that. Xero is the best example of a clearinghouse at the moment that's not optimized for that sort of stuff. If you're using Xero, keep that in mind. There are better solutions than Xero Payroll, unfortunately. Which brings us to the modern clearinghouses. The example I've got here is Employment Hero, which used to be called KeyPay, and MyObs One is pretty upgraded with some modern features as well. So they provide more flexibility over payment authorization as well. One of the key failures I'm seeing with something like Xero is that only one person can authorize a superannuation payment, and that person often has to be the business owner. If you think of a normal business, how often is the business owner processing payroll? And the answer is not that often. Normally the bookkeeper's doing it, sometimes the accountant, sometimes the admin person. If they're processing payroll, they push the button to say okay to super. That code gets sent to the owner. It relies on the owner then logging in, processing the payroll. The owner's busy, the owner forgets, and it's pretty easy to see how superannuation would get missed completely or paid late under that system. So potentially using more optimized payroll software with a modern clearinghouse would overcome that by allowing the bookkeeper, by allowing the accountant, the admin person to approve that payment at the same time they lodge the pay run. And contractors. Contractors are fully encompassed in these rules. You have to pay contractors super on their payday. Their payday is when you pay their bill. So contractors where you are liable to pay their superannuation have to be processed through payroll, just like everyone else. I would consult your payroll software's guides on how to do that. Some of them will have a slightly different setup process. You wouldn't have a wage as such for them. You would just be processing a superannuation payment. But contractors is probably the bit that's going to be the most, I suppose, the biggest change for a lot of people, because ATO will have a lot more visibility over things. I think they're going to pick up a lot more contractors that aren't being paid super, for one, where they should be, but also contractors being paid later or infrequently is probably something they're going to pick up on. If you think you can have your contractors, pay them weekly, but pay your super monthly or quarterly for them because ATO don't see their wages, I think the ATO will be clever on that one, and they'll realise that contractors being paid regularly every month or two are probably regular contractors that should be getting it more often. That might be enough for them to just send you a sneaky little letter and say, hey, can you send me some details of some invoices and when you paid them so we can check that. So be wary with contractors. I'm not going to go through that, maybe a screenshot of that, or just have a look at it on the recording, but it's just a summary of the three main accounting softwares, payroll softwares that we use, and Single Touch Plus, the process, speed of payment, payment control, points of failure, and external processing. So I won't go through that, but just take note that that's there for you to refer to later on. So important part of this is how super is calculated. And thankfully, there's not a lot of change from ordinary time earnings, which is how super is currently calculated. They've changed the terminology to qualifying earnings because why wouldn't you? You change something else. Why not change the name just to make it more confusing? Qualifying earnings, the definition is essentially ordinary time earnings, commissions, directors' fees, fees paid to entertainers, sportsperson and performers, plus salary sacrifice amounts where they would ordinarily, if not for the salary sacrifice, be included as qualifying earnings, and eligible contractor amounts. There is a ATO ruling, which is a law companion ruling, 2026D1. D stands for draft, it's not finalised. That is really good document to bookmark, and it goes through all sorts of situations whether that payment of wages or allowances or whatever it is, whether that payment would attract super or not. So for me, if you are in payroll, processing payroll, or at all responsible for making sure wages and superannuation gets across, I would have that bookmarked. Thankfully, super is still 12%, so 12% of qualifying earnings, no changes there. And the maximum contribution base, there is a slight change there. For anyone that's not aware of what the maximum contribution base is, it is the total amount of wages that an employer has to pay superannuation on. So if I take an extreme example, someone earning $20 million a year, let's say you're the CEO of Coles or something, Coles doesn't have to pay 12% super on $20 million. It only has to pay 12% of the maximum contribution base. The maximum contribution base is around $270,000. So that's the level of wages. The general concept here is that $270,000 times 12% equals the $30,000 contribution cap that individuals have in putting money into super that's tax deductible. So that maximum contribution base changes every couple of years when that contribution cap changes. The maximum contribution base used to be a quarterly calculation because we paid super quarterly. It used to be if wages were over $65,000 for a quarter, you didn't have to pay super on the excess. Now it is just an annual amount. So in practice, what that means for individuals that are earning more than, say, $270,000, you are paying super on the first $270,000 they earn in a year, and then for the rest of the year, you're not paying super. If anyone needs help with that, reach out to us. Good payroll software will keep track of that, and it will, once that cap is reached, it will stop calculating super. But I would suggest having that in the back of your mind if you do have employees earning that sort of money, that you've got some sort of manual check in place just to double check that that's being done right. That's just a screenshot of that Law Companion ruling. So if you are Googling it, I do have a link there. I don't know if you guys can click on that link or not, but that link is there. So maybe screenshot that. But if you just type into Google LCR 2026-D1, it pops up as the first entry. That's what it looks like if you're not sure whether you've got the right thing or not. So moving on to late payments. So first of all, if you are late, pay it ASAP. Don't waste any more time. Get the payment across. If you have sent the data packet across and you pay late, the super fund should still accept it. They might reach out to you just to clarify something, but they should accept it. If they don't accept it, you'll get a rejection message, and then you can resubmit it. But it is important to pay it because interest and penalties are calculated on the shortfall. The shortfall is the amount you have not paid. So if you pay late, you reduce that shortfall amount and you reduce interest and you reduce penalties. Now there is a maximum 60% penalty on shortfall amounts, so unpaid super effectively. That 60% penalty can be reduced to zero though. Lodging a voluntary form when you are late reduces penalties by 20%. That one can reduce by up to 40%. As long as the voluntary form is lodged within 30 days. Between 30 and 60 days, it's a reduced amount, and so on and so on. There is another 20% discount on late super if you've had no super guarantee charge issues in the past 2 years. My understanding of what they see a super guarantee charge issue is a case where the ATO has had to issue an assessment notice. So it's not that you paid super late 1 day, 1.5 years ago. It's did that result in an ATO assessment or not? Still waiting on a little more guidance around that, but potentially with those two combined, penalties could be reduced to 0%. ATO do issue assessments based on the info it gets from STP, which is single touch payroll, and super funds. So if we think of the whole larger picture here, whenever you do a payday, you are required under Single Touch Payroll to lodge that pay run details with the ATO. So the ATO get details of the person, their tax file number, the wages they get, and the superannuation they are supposed to get. You are now lodging the details of super payments with clearinghouses, and magically enough, that info goes to the ATO as well. So the ATO now also see tax file number, employee name, and amount of super actually paid, and the date it was paid. Not difficult for the ATO to go, well, this amount should be paid, this amount has been paid. Has they paid the right amount? Do we need to issue an assessment notice for unpaid super? So my information is the ATO will generally wait 3 months before they start issuing assessments, which gives you time to fix up late super. I think their ultimate goal here is to have assessments going out pretty quickly after super is unpaid, but they are going to give people time to adjust to all this. But those assessment notices are coming, and coming pretty soon by the sounds of it. And really important to note that in a lot of cases, penalties cannot be remitted, particularly once that ATO assessment is issued. So aside from what they've specifically said are things that can reduce the penalties, like the voluntary form that I said before, there is very little scope for the ATO to turn around and say, look, you made a mistake, you're unwell, something happened outside your control, whatever it is, or you just plain forgot. Once they've issued an assessment, they're not going to be able to remit penalties. And given penalties can be up to 60% of the shortfall amount, if you think of some of the mistakes that can be made and the amounts involved, that can add up pretty quickly. Now I've got a list of traps and trips here. So contribution caps in the 2027 year. So if we think about this, we're doing payday super from 1 July onwards, which means we've got 52 weekly payments in that 2027 year. In the year before that, you've got quarterly payments that is due 28 days after the end of the year. So theoretically, in the 2027 financial year, you've got the June 2026 quarter, which might be paid sometime by the 28th of July coming up, 2026. And then you've got 52 weeks of super in that financial year as well. Contribution caps is, I think it's $32,500 next year, $30,000 at the moment. Having effectively 15 months worth of super in one financial year could cause someone to breach that cap where they otherwise wouldn't. So what I would be suggesting, I do go through this in a later slide, I suggest that if you have any employees on a higher income level that are at risk of breaching that contribution cap, should they have 15 months worth of super instead of 12, that you go and assess that situation and maybe pay their June quarter super before 30 June. If you've got employees salary sacrificing, same deal. You need to make sure the salary sacrifice amount isn't going to cause them a problem once we switch over to payday super. Trap number 2. So if you have a pay week ending 30 June or any day in June, but the payday is 1 July, that payment that attracts payday super. So that pay run, even though the entire pay week may be before payday super comes into play, as I said before, the trigger date is the payment date. That is the only date that matters. So if you pay the wages on 1 July, you need to pay super within 7 business days. I touched on failed payments before. You'll get a message from the super fund. You need to keep on top of those because you've only got a couple of days. I think you have 7 days to fix, but when you factor in the time it takes the super fund to get a message out to you, sometimes you don't see that message. It comes late on a Friday. You may not see it till Monday. You get busy on Monday. You see it on Tuesday. You can run out of time pretty quickly to fix these things. And if you're not getting a message pop up in your accounting software, you may not see it at all. It may be a case where you need to be checking your bank statements every now and then for return superannuation payments. You may need to contact your super fund to make sure they're sending an email to a nominated email address. So you just need to fine tune some of those processes to make sure you don't miss failed payments. June quarter. June quarter late payment in particular is a massive trap. If you pay the June quarter late, so that's June 2026 that we're about to finalise now, if you pay that late, that payment does not count at all, full stop. The June quarter will be seen as unpaid. The only way your June quarter is treated as paid is if it is paid and received by the super fund before the 28th of July. No ifs, no buts, there is no room for any sort of forgiveness on the ATO side on that one. It's enshrined in legislation. If it gets to the super fund on the 29th of July, it does not count. It will count as a prepayment of next year's super. It will also mean June being unpaid triggers all the penalties and interest that comes with it being unpaid. And of course, you're not going to know it was unpaid, particularly if you paid it on, say, the 25th of July and it didn't hit the super fund's bank account until the 30th of July. You're not going to know that. So that is a massive problem and a big trap that can apply to people. So if you take nothing else out of this, pay your June quarter as soon as possible after you've done that last pay run in your financial year. A little tip, check your payroll setup. So with all these changes, you need to make sure the superannuation is being calculated correctly, it's being reported correctly. We see in some payroll setups that salary sacrifice amounts aren't classified as superannuation properly, so all that needs to be checked. We got super lookup tool. So really important, obviously when you get a new employee, you've got to get their super details, but you are able to actually look up their superannuation. There is a way to do that with the ATO at the moment. They are expanding that and integrating that into payroll solutions. So again, a good payroll software will have that option in there where you can type in with their tax file number, their name and date of birth, initiate a lookup, and it will send back to you details of a super fund that the ATO has details of. And then if you don't get anything else from the employee, you're allowed to contribute into that fund. So that's one way of avoiding issues with new employees. So keep an eye out for that in your software. One-off super contributions. So we see it a lot with business owners where they've had a good year, they just want to pay themselves a nice little bonus into super. That needs to go through payroll. It technically needs to go through payroll now, but we often see that it doesn't. But if it doesn't go through payroll, the super fund's just going to reject it because they don't get that little data packet that goes with it. You'll send it off, it'll go back to your bank account. And unfortunately, from what I know of a lot of business owners, they won't see it, they won't realise that's what it is until too late. The end of the year will pass, they won't have an opportunity to get that money into super and get the nice tax deduction that comes along with it. So keep an eye on that for one-off super contributions. Do it through payroll, do it properly. Recurring direct debits to super is not an option. Not a lot of people do that now, but some do. If you have a recurring direct debit there going for superannuation contributions, cancel it. Just nip it in the bud now. It doesn't work, again, because there is no data packet going along with that payment. And payment allocation order is really, really important, which I go through on this slide. So essentially, payment allocation order from 1 July forwards is that every single payment of superannuation automatically goes against the most furthest back outstanding one, the oldest outstanding obligation. Under the current rules, you can technically pick and choose what superannuation obligation you are paying, which has been really handy when we get superannuation audits because you can manipulate payments so that instead of, and I've seen situations where there's 12 or 16 late payments, you can actually turn around and say, well, they're all prepayments of the next one, and you've only got the first original one outstanding and late. And you can save a significant amount of penalties by doing that. Those options are gone. So I've done a little table here. So payday 7 July 14/21, super due 9 business days later, 7 business days later, 9 calendar days later. The super amount, let's say that very first one they completely forget. They forget that payday super came in, they don't do it for whatever reason. They jump in, they pay the second one, they pay that one on time. The third one, they pay 1 day late. The fourth one gets paid on time. Under the old rules, only those 2 in red are treated as late and have issues. Under the new rules, every single one of them is late. The last one is unpaid, and you've got a problem with every single one. The takeaway from that is if you underpay or forget to pay one single pay run, every single future pay run is going to be out of whack. So it's hugely important to keep on top of it, keep track of whether you're late, whether you're on top of it, whether you've missed one, because no longer is missing one an issue for just one payment. It is now an issue for every future payment. I don't know if the ATO are planning to change that. I don't know if that's an unintended consequence of how the rules are set up or not, but that's the reality of where we are, and that's what we're stuck with. So keep an eye on that. If you need help getting reports out of your software, what reports you can do and what you can do to check, we can help you come up with some sort of procedure to keep on top of that. So what businesses need to do? So number one, review your cash flow needs. You're now paying super every payday and not every 3 months. Does your business rely on large customer payments somewhere around end of month or something in order for you to make superannuation? Because now you can't rely on those payments. You need to rely on something else. So you need to plan your cash flow around that a little bit better. We also highly recommend a separate bank account for holding monies attached to superannuation and tax and things like that. So what we would suggest is, if nothing else, you would know what your estimated weekly payroll is, you would know what your estimated weekly superannuation is, have a separate bank account, put a couple of $1,000 buffer in it, and then every week transfer your estimated superannuation amount, maybe plus a little bit to give yourself a bit of a buffer. Put it in there so there is always money free for that superannuation, and then set your payroll system up to deduct out of that bank account and not out of the trading account. That way you've always got money there. There's no risk of rejected payments due to there not being sufficient funds in the bank account. Pay June super before 30 June if possible. That's my recommendation. Pay it before 30 June. Keep in note, I say 30 June because you only get a tax deduction for superannuation when it's paid. Doesn't matter what pay run it relates to, only when it's paid do you get a tax deduction for it. So if you want a tax deduction for June super this year, you need to pay it this year. So 30 June payment date, but 30 June, it's the day the super fund has to receive it. It's not the day that you physically pay it that matters here. It's a quirk in the system. So if you want to claim a tax deduction for June's super, theoretically it needs to be paid by somewhere around the 20th of June, allowing clearinghouses 10 days to get it through. Does make it difficult when you've got still probably one more pay run after the 20th of June. You can prepay that one if you know what the amount is. But we highly recommend paying June super before 30 June where possible. If nothing else, have it paid, dealt with, sorted by no later than the 14th of July. You need to review your payroll setup. I touched on that earlier just to make sure everything's hunky-dory and allocated correctly. ATO are relying on the data sent by your payroll software. If it sends the wrong amounts, and it causes things to not match up, makes you more likely to get an ATO letter or an ATO audit. So having that set up properly is pretty crucial. Some businesses have thought about it, some haven't yet, but moving to a fortnightly or even a monthly payroll. If you're currently on a weekly payroll, you might want to consider changing that to fortnightly. Going from weekly to monthly is probably a pretty big impost on your staff. Weekly to fortnightly, you should be able to work something out with them. But if I think about it from a compliance point of view, doing it weekly, that's 52 payments of super, 52 opportunities, for the lack of a better word, to be late and incur ATO penalties and interest. If you move that to fortnightly, that's 26 instead of 52, so you've halved your risk. You move it to monthly and that's 12 instead of 52 and you've made your risk a quarter. So if you're a business owner, you should consider moving your pay runs to a less frequent action, so just to cut down your risk a little bit. As I touched on before, review your employees and their contribution caps. I would argue it's your employees' responsibility, not yours, but do the right thing by your staff. Just check in with them, make sure there's not going to be any issues. I did touch on the ATO Small Business Clearinghouse before. download the data before 30 June. As I said, once 1 July kicks over, you do not have access to that information. They are just shutting it. I don't know why they would not make it read only and let you download info out of it, but the ATO does things its own way sometimes. That's the reality of where we are. So if you have been using the ATO Small Business Clearinghouse, get in there, download every single report, confirmation of every single payment, download it all, because as soon as 1 July ticks over, you won't be able to. The last thing you want is an ATO audit in 4 years' time and they start questioning superannuation payments made via the clearinghouse. And as much as the ATO should be able to see the ATO clearinghouse data, they're not going to bother looking. They're going to rely on you, because the onus is on you to provide that information to them. So get in there, just mitigate that risk completely. Probably the obvious one, test your payday super processes before 30 June. So I kicked ours over to Payday Super a couple of weeks ago, just to make sure there's no kinks in the system, nothing I need to iron out. So jump in there, do 1 or 2 early and just make sure that it works. The last thing you want is to do your first one and find out there's a problem with it and the first one's late. Consider onboarding software to manage the collection of employee info. Some businesses do that already. Some businesses will have a Word document that they use to collect it. Some businesses don't do very much and end up in some trouble. Hopefully that all stops with all this going on. But there is some pretty reasonable onboarding software out there. You type your employee's name, email address in there, it sends a form out to them, it collects it, it then feeds that info into Xero or into your payroll software and makes the process for you as the business owner a lot easier to deal with. The good ones will, in due course, I don't think they do now, but in due course they would probably do a check of the superannuation details entered to make sure they match what the ATO's got on file. So there are some pretty good benefits to using onboarding software. Probably the best example I've got of one is called X Onboard, primarily integrates into Xero. So if you do use Xero, that might be somewhere just to start with. And I'm pretty sure it's free if you've got under 10 employees or something. So that might be an easy way just to dip your toe into the water with that sort of stuff. Understand payment authorization. So again, went through that a little bit earlier, but you need to understand who has to authorize a superannuation payment, because that person needs to actually authorize it. Who's getting that 2-factor authentication code? So that person is the one that's got to log into the Xero or log into the payroll software to actually push the go button. So understand who's doing that. Is that a problem for your process? Should you try and have somebody else, that authorized person? There's also the issue in there is, does the owner want to be the one authorizing it for other reasons? Maybe it's cash flow, maybe business is tight and they don't want super to get paid. Maybe waiting 4 days is important for them, so they want that authorization. You just need to understand the risks involved in that. And the obvious one, pay all super on time, or at the very least rectify it ASAP and lodge the voluntary forms. And in true ATO and government fashion, these voluntary forms have not yet been created. We're 2.5 weeks away from Payday Super starting, and we have no idea what that form looks like. I would hope that it's there in 2 weeks' time so we can have a look at it and review it and see how it works. But the key takeaway right now is pay your super on time. And if not, work out, contact us, get a copy of the form and lodge a voluntary form, because it does drastically reduce your penalties. I just want to focus on what the ATO is doing. I'm nearly at the end so we can get through any questions. The ATO is a data matching machine. It was almost 7 years ago now, I think, when I was in a little session with the ATO and they were telling us about how much data they got, and the amount was absolutely staggering. It is so much more now than what it was 7 years ago. They are just an absolute machine full of data. They've got data centers full of stuff. It's not difficult for them to cross-reference things these days. So if you think you can get away with things, it is so much harder now. The only bottleneck is whether the ATO has the resources to follow everybody up. Don't leave it to chance. ATO knows who's doing the wrong thing. Don't let them target you. But the ATO have openly said their initial focus is on those not trying to comply. They have a traffic light system. Essentially, red light is people not complying with the old rules. So if you're not paying super quarterly, you are a red light. The orange light is people complying with the old rules, but not making real attempts to comply with the new rules. So that might be, still doing monthly payments instead of payday super, trying to get away with not lodging data packets, things like that. So if you're doing that sort of stuff, not the initial focus of the ATO, they'll go after the red light people first, but probably won't take long for them to move on to the people in the orange light section. And then the green light is everyone trying their best. I imagine they've officially said that lasts 1 year, that traffic light system. I imagine you'll probably get that extended out to 24 months, where people genuinely trying their best to do the right thing here and comply won't be a target. Doesn't mean you won't get audited, you just won't be a specific target. So there is a little bit of grace there. The important thing is just try, do your best initially, try to put things in place, try to comply, and you should be okay for a little while. But we need to understand how audit risks, how audits start and all that sort of stuff. And really important is that I've seen many times payroll audits come out of other sort of audits. Could be an FBT audit, it could be a GST audit, it could be something else. They start with GST, they notice there's contractors there, they ask for contractor invoices to, because they're checking the GST apparently, and they'll see that these contractor invoices are mainly for labour. So then they'll ask the question, have you paid super on them? And now all of a sudden you've got a superannuation audit. So you could be doing everything right with payday super and still get a superannuation audit. So you need to understand how these audits start to mitigate your risks of a problem. So keep that in mind, comply with as many other things as possible, because it is something the ATO do like expanding an audit scope. It's easy money for them. So keep that in mind when you're going through it. And we hear from clients in various different forms about a reasonable care defence. I've taken care, I've been trying. How does that stack up? Depends on what you're trying to defend against. Single touch payroll's been around since 2019. It's been around for 7 years now. If you are trying to argue that, well, I wasn't using payroll software, but I'm trying, that's not a reasonable care defence. You've had 7 years to do that. That's not acceptable. If you're saying your clearinghouse takes 7 days to clear and you just weren't aware of that and you've been paying payday super 4 days after payday, you might get some leniency from the ATO on that for a little bit of time. But that reasonable care defence is directly proportional to the amount of time you've had to deal with that change. Now, there'll be clients on here with super funds, and there are a couple of little specifics for self-managed super funds. So firstly, every single self-managed super fund will need what they call an ESA, an electronic service address. It's not an email address. It is another registration with another body of some sort. It's essentially to help that SuperStream messaging system. If you're one of our clients and we process your super fund, we register it for you. You've got one. If you don't know what it is, reach out to us and we'll tell you. That would then need to be entered into your payroll software. So when your payroll software sends the messages out, that the message actually gets across. That ESA is what allows the message to get across. If you've got a self-managed super fund, you need to make sure your bank account complies with the new modern payment standards, which is NPP. So that's the OSCO, Pay2, all those things. Not all bank accounts do. All banks do support it, but not every single bank account type does. So you would need to contact your bank as to whether your bank is NPP compliant, because if your payroll software uses OSCO or something like that to transfer the money and your bank is not OSCO compliant, that money won't get across, it will fail and you'll have problems. And there are thankfully some related party exemptions when it comes to self-managed super funds. Importantly though, the 7-day payment rule still applies. There is no exception from that. If you're a business owner and you are paying your own super to your own super fund, it still has to be there within 7 days of payday. The data rules are relaxed though. You can, as much as I said earlier, you can't do a bank transfer. You can do a bank transfer if it is your own super to your own super fund. So that is one pretty crucial exception there. And probably a lot of people will probably pick up that if there's no data packet being sent, how does the ATO also track if super is being paid on time? I will let you work out what that actually means. And that's the end of my session. And it's really just questions now. So if anyone has any questions, please throw them into that Q&A. I can see we got one there. So Small Business Clearinghouse June quarter, can you still process this? You can if it's done before 30 June. As soon as 1 July ticks over, you cannot process it in the ATO Small Business Clearinghouse. So I will stick on. Thank you to Anne and Bridge. You've both answered that one in the comments, I can see as well. Thank you. So I will sit here for a couple of minutes, see if any other questions come through. But in the meantime, thank you everyone for taking an hour out of your day to listen to me prattle on. Hopefully you all got something out of it. Any questions, if you think of something later on, just reach out to us, send us an email, give us a phone call. We'll do our best. I suppose enjoy your weekend. You're welcome to leave. If you don't have any questions and you want to leave, you're welcome to leave, and enjoy your weekend, and we'll be in touch. Thank you. All right. Doesn't look like there's any. Oh no, we've got some more pop up, have we? I know, Anne, you put the link to the compliance ruling in there. Yes, Anne, good point. If you're considering altering your pay run frequency, please check your award. I should have mentioned that. A lot of awards will dictate no less frequently than fortnightly. So if you've got employees in an award, you can't move them to monthly. There's a good chance they have to be fortnightly, if not weekly. Yeah, that's it. So assuming none come through in the next 30 seconds, I will hit the end webinar button. And again, thank you all for joining. Beautiful. Thank you all.